Deputy Eoin Murphy.
Thank you, Chairman, and thank you, Mr. O'Reilly. You're very welcome. I'd like to look at Volume 3, page 40 in the evidence books. It's 33AK, but it's a summary document. Senator Darcy touched upon this earlier on. It's a meeting of the Financial Stability Coordination Committee in April 2004.
Euphoria?
You have that?
Yeah.
Great. So what we see in front of us from the summary of that meeting is the financial regulator stating his concerns in relation to banks being blind to risks building in the banking sector and euphoria existing in property lending markets, which we heard earlier. And it says in bullet 3, he proposed roadshows so that the CBFSAI's concerns could be communicated to senior management and boards of banks. What's a roadshow?
Well, I think that was a kind of a term used in the board itself, and we scratched our heads. What does that mean? You can't go down to, let's say, ploughing championships and start talking about these things like you can with consumers. So I would have said that, and the way I interpreted it was that we needed to start communicating directly with chairmen and chief executives of institutions, and the ultimate piece that emerged. And remember, I was saying this to the Financial Stability Committee, and they then had to work out some sort of strategy. And the major strategy that arose out of that was that we meet the banks, the big executives in banks, in the forum that we had, and the first one took place at the end of 2004, so that we could communicate our concerns.
This is following the Financial Stability Report. It was
Yes.
that forum.
Yes.
Okay, I'll come back to that in a second, if I may. If we look at bullet 4, it says on that same page, the committee also agreed to follow up the stress testing exercise, detailed analysis of the housing demand, and a study of previous crises versus current conditions in Ireland. Did any of that happen? And did it ring any alarm bells?
I wouldn't have been in the areas that would have been dealing with that, because they were responsibilities for the Financial Stability Department. And I know of research papers would have been written about this. I don't know whether it was written before or after this. There was one research paper that talked about us being, what were the factors which led to the question, were we in equilibrium prices, were prices overpriced or not? And I know there was econometric work done in that area.
But given the serious concerns expressed at
Yes.
this coordination committee, Stability Coordination Committee meeting,
Yes.
and the committee agreed to follow up those 3 items.
Yes, well, there were stress testing done later on that as well.
When did that stress testing, the follow-up stress testing occur? Was that the stress testing in 2006?
No, I think I haven't got. I think that they occurred much more frequently than that.
Okay. But what about then the detailed analysis of the housing demand and a study of previous crises versus current conditions in Ireland?
Well, I never eventually saw a paper on that, I'm afraid.
Okay, the reason I ask is because in the Regling and Watson report on page 29, they spoke about the problem laying in a plain vanilla property lending. And the quote that they have is, lending trends in the Irish banking sector, especially from 2003 onwards, feature a pace of expansion and a rise in asset and funding risks that should have rung alarm bells. This is the Stability Coordination Committee,
Yes.
concerned about systemic instability risks, talking about doing the kind of research that perhaps could have rung those alarm bells, and you're not sure if it happened or not.
That's right. I'm afraid not. I can't remember at this stage. It's 10 years, 13 years ago, and I can't. And I looked through documents. As you know, there are a lot of documents to look through, so I didn't come across any, and I can't remember it at this stage.
Okay, well then, let's go forward to the end of 2004
Yeah.
and the Financial Stability Report and the round table that you had. At that point in time, were you able to have an input into the Financial Stability Report in cooperation with the Central Bank?
Yes.
Okay.
And I think that Financial Stability Report did talk about the problem of personal indebtedness in the property sector. It talked about commercial lending problems. So it did go through.
Your concerns made it into the Financial Stability?
Yes.
Okay. And you met with the banks then to discuss these concerns?
Yes.
Did the banks ignore these concerns?
Well, I read the Hohenheim report, and there seems to be a difference of opinion as to what happened at those meetings. And unless we weren't speaking the same language, I don't know, but I remember making a statement in the 2004 report that the economy was exposed if there were an external shock to the system. We didn't envisage any internal sort of turmoil, but I do remember making a statement of that to that effect.
You sit down with the banks at the end of 2004, and it's clear in the Financial Stability Report your concerns about the property lending that's happening in the banking system. And in that same year, and I'll take one bank that's come up in evidence with Bank of Ireland, they have changed their income multiples, they've changed their loan-to-value policies, they've introduced first start mortgages, and they've introduced more flexibility for seasoned multi-property borrowers. So they've done that in 2004. And at the end of 2004, you're warning them about this problem building. And then in 2005, they turn around and introduce 100% mortgages in response to moves by key competitors First Active, Ulster Bank and PTSB. Did they ignore you?
And just to repeat what I said in my opening statement, I made a statement in July saying that if you're giving away to 100% mortgages, you shouldn't be giving them to people that can't afford them. And I said that the banks must make sure that there is an ability to pay, etc., etc. So we were concerned. We will continue to be concerned. I suppose the big problem all the time is what instruments were we using to put a stop to this? And even in 2007, there seemed to be an awful lot of soul searching as to what could be done, and moral suasion and capital ratios or capital requirements were the two things that were being mentioned, and they had little effect.
But did the banks ignore that statement that you made in 2005?
Well, I think it goes back to the euphoria. We failed, I suppose, to convince the banks that there was an issue.
Failed to convince them?
Yes.
But could you not have done more than try to convince them? Could you not have actually interceded, given the concerns, the systemic concerns you raised in 2004,
yes,
which you had raised with them again in the Financial Stability Report,
yes,
in the forum? They then go and introduce this new product, which we'd never seen before.
Yes.
And you're worried about it. You make a statement, it fails to
yes,
convince them.
yes.
What then?
But just to be clear, the whole idea of new products, etc., was a consumer issue, and the consumer people felt that there was a need for making sure that if there was innovative products, they should be made available to people. But they also said that there needed to be an affordability. And not alone that, but there was a code which said that you will be sanctioned if you missell a product.
Taking all that,
Yeah.
taking that the consumer regulation,
Yeah.
of course, is underneath
Yeah.
the financial regulator. If we go back to 2003 in July, you wrote to Bank of Ireland after doing an examination into their mortgage lending policies, and you said the examination raises questions about the maintenance of lending standards in your institution and about your ongoing monitoring, management and control of risk in relation to residential mortgage credit. So what gave you any confidence in Bank of Ireland to responsibly administer this new product of 100% mortgage lending in 2005?
Just 2003, what date is that?
That was July 2003 with a letter to
Yes,
Bank of Ireland.
and another letter issued, I think, on the 24th of December 2003 or 2005?
2003.
2003. And we got a reply from the Bank of Ireland in February 2004 saying that they were complying with all policies. And we entered into some discussions with them about that, and eventually the management letter from PwC came in saying that they're quite happy with all their lending policies. So we were still cynical. We were still trying to convince banks. There is still a question, and I agree with you, what instrument should we have been using? Eventually, the instrument that was used was to increase the capital requirements in relation to the 100% loan to mortgage and to commercial lending. That was in 2006.
Yeah. Thank you, Chair. But just going back then to 2004, and in the 2004 Financial Stability Report, you also raised concerns about commercial property lending. The persistent increase in the rate of lending to some parts of the commercial property sector is a concern. At that very moment in time, Bank of Ireland had set up a dedicated property unit responsible for managing relationships with a total group exposure in excess of 30 million to write higher risk, higher return property transactions.
Yes.
Did you raise this with Bank of Ireland in the roundtable in 2004?
I didn't raise that particular issue.
Were you aware?
I raised a general issue. At this stage and this distance in memory, I don't know whether I was aware of it or not.
Okay, but were you aware that at the same time as you were warning about these risks, banks were making moves in relation to commercial property lending that were going in the opposite direction of what you were warning against?
I wouldn't have been aware of particular issues. All I can say at this stage and at this distance in time that I was cynical about whether they were applying the policies that they said they were applying. And from that point of view, moral suasion seems to have been the only action that we took. We should have done more.
Thank you very much, Mr. O'Reilly.